What's going on, everybody? Good evening. What's up, Mike? We're gonna get going in just a little bit. Thoughts on Baba? Yeah, I mean, we might as well just start it off now. Usually, I like to wait a little bit for everybody to hop on in, but yeah, I mean, for this class, there's not really much of a reason for us to wait. We'll just start going through everybody's questions. What's up, Husky? Good to see you. Move this over. All right, well, I'll give you guys an introduction to the lecture, and then as more people trickle in or leave throughout the night, we'll let that happen. But yeah, big idea for tonight, everybody. Different type of lecture for me. I don't remember who I'm filling in for. I think 1K or maybe River, but doing just a little Q&A. Yeah, pretty simple concept here. Really, any questions or things you guys want me to cover, go ahead, put it in the chat. Really, no restrictions on how many things you can ask about. I'll look at charts. I'll talk about concepts, anything really that you guys want covered. Happy to do it. All right. That said, the first question was from Mike, which was thoughts on Baba. So let's take a look at Baba here. Let's see. Okay. Okay. Yeah. So in general, Baba is one of those names that's really kind of hit or miss. In general, the thing's been in a range for almost 2 years now. I mean, you look back, I haven't updated this chart in a little bit, but if we clean this up a little bit, this thing pretty much has done nothing for about a year or two. And you got this real important trend line sitting right here that it looks like we're currently rejecting as of yesterday. Um, we had some pretty high volume coming up into this trend line, which looked decent. A little bit of a reversal bar there on lower-ish volume, and just back into the moving averages here. In terms of just overall, do I like trading Baba? The answer is no, right? It's a name I typically try to stay away from. I've given it a shot to trade in the past, but for the most part, I just don't love the way it moves. It's just more volatile than most other names you trade. Like, honestly, in my opinion, it's more volatile intraday than something like a Tesla. So personally, it's not something that I really like to trade, which always is going to give me that sort of bias against it. That said, in the short term, like I said, rejecting that longer term trend line over the past couple days. In terms of a level to kind of look at it, if I was going to trade it long, I mean, you're kind of coming into a place where if you like it long for whatever reason, this $80 area is probably the place to be watching out for a reasonable buy. Um, yeah, outside of that, though, it's just not my favorite name. I think there's names that look better in the market for longs. Those of you who were in my lecture, I think last week now, I was pretty clear that I was cautious to the long side. Obviously, that caution in hindsight wasn't warranted. But me personally, like I mentioned, I like when the market's a bit easier. And now it's pretty clear the moving averages are trending back positive again. So it's a whole lot easier to be looking for longs in general. So as a result, kind of like we identified throughout our last workshop, we were looking for names exhibiting relative strength. PLTR was one of them and got a nice move higher on it about, I don't know, almost 10% higher since the last time we looked at it. Shop was another one. I think it was trading right around the $70 area. Again, not quite 10% higher, but pretty close, 7-ish percent. So I was most interested in those names showing relative strength. NVIDIA was another one. And those names have continued to show relative strength. And in my opinion, things that I'm looking long on are going to be these names that continue to show relative strength, which is going to be your NVIDIA, names like Meta, which is already trading back at all-time highs, Meta being one of my favorites right now in the short term. So in general, Baba, not something I'm incredibly interested in. If you put a gun to my head and told me to buy it at a level near the current prices, I'd probably buy it at 80. I definitely wouldn't be a buyer up close to this trend line, though. I would be, taking profits as we get closer to this trend. Hopefully that answers your question, Mike. Let me know if you have any other questions related to that. Kanawaluo, sorry, I definitely screwed that name up. Do I see more downside tomorrow? I mean, as it relates to today, on the indices, right, definitely not much downside at all. Looking deeper into some individual stocks, Google closing green. Oops, check, I messed up. Amazon closing green, Microsoft closing green, Nvidia pretty decently red with the semiconductor as a whole, mostly flat or semi SMH. Come on. Semiconductor sector as a whole also closing red. So personally, I wouldn't say that we've really gotten any downside over the past 2 weeks, right? Besides this initial dip lower. Um, but outside of that, in terms of downside tomorrow, right, we're definitely extended. You take a look at the indices here. We're extended, right? There's no way around that. We've definitely moved pretty far, pretty quickly, and we're reasonably extended above the moving averages. But that said, we're definitely back in more bullish territory than we were, and it's going to be a bit easier to look for those long trades on any pullbacks that we get. Yeah, so in terms of downside imminently tomorrow, I wouldn't be incredibly surprised. Like I said, we got some distance here from the moving averages. It's not the best place to be looking long, at least as it relates to the indices. Me personally, I'm more focused on individual stock setups. Names like Meta, I mean, really starting to exhibit what I'd be looking for, right? Showing relative strength throughout this entire pullback, now beginning to start to form this kind of tighter flag back into the moving averages. So this is the type of setup that I'm most interested in right now to the upside. Yeah, in terms of downside tomorrow, yeah, I mean, it's absolutely possible. I'd be looking to be buying a dip if it came, not with significant size, but we have the Jackson Hole event on Friday, so it isn't the time to really go super heavy, but definitely some opportunity to the long side on any dips on these stronger names. Ethan, can you explain how to trade gap fills? Yeah, it's an interesting question. In general, we'll just start with the SPY because that was kind of the most recent example of a gap fill. In general, when trading gap fills, it's reasonably simple. Let me just clean this all up so we can really see what we have going on here. So here on this day, we created this gap, right? So we gap down on this day and we gap down on this day here, right? So two gaps. I want to zoom in really quick on the 5 minute and look how we've reacted to those gaps over the past few days. So we got this initial gap lower here and another gap lower here, which we ended up filling with some wicks. So it looked a little bit more like this. In general, right, these gap levels are always going to be levels of support and resistance, right? That's kind of based on that. That's just in their nature, right? It's how those gaps work. One thing to note, though, this one in specific, a little bit cleaner, right? Kind of an interesting one. We gap up into that level, and then this bottom of the gap starts to turn as support. Then we break through that gap, and again, kind of difficult to see, but we break above the high level of that gap, retest that, and it turns into support. This one, a little bit less clean, and it looks a bit better on a daily here. So just to kind of show you where this comes from again. Really the gap, the way that I'm drawing it is the distance between these two wicks, right? So that's one example of a gap. This would be another example. This would be another example. They're not drawing anymore. This would be another example, and this would be another example of a gap. So in general, right, when trading gap fills, you really just want to treat that like any other support and resistance level. And how would you structure a trade based on that? Well, obviously, you're always going to be reacting. The first gap fill here, obviously, there's going to be a bit more volatility. So you got to be a little bit careful, trading just off support and resistance around here, right? There's a lot more to consider. On this specific day, this 8-2 day, the VIX hit 65, right? The VIX being the volatility index. You take a look based on or back 10 years on the VIX. The VIX has hit 65 twice in the last 10 years. So it's safe to say that this isn't something that happens very often. If we look back 20 years, the VIX has hit 65 three times in 08, COVID, and 2 weeks ago. So it's a very infrequent occurrence. And as a result, right, a lot of technical analysis is kind of going to go out the window when volatility is that high and prevalent. So you're going to need to be a little bit more careful giving a lot of weight to technicals when volatility is that elevated. At that point, the market's moving strictly on emotions. fear, greed, news, whatever. So you're going to need to be a bit more cautious. And I would like to think that that explains why this specific gap fill trade was much less clean. Whereas that second gap fill, when volatility had subsided a bit, it was effectively perfect, right? I mean, it was pretty much textbook. Let's look back again on the 5 minute, what that looks like here. We break into that gap here in the morning, right? So first candle of the day, we break that level of resistance. We retest that level of resistance. That's now turned into support. We move higher off of that just a little bit. We come back to retest that same gap level, which I'm assuming this level isn't as accurate as I could make it. So let me just dial it in all the way. The high being 536.99. So let's fix that, 536.99. So that's this level. I'm just going to make these levels exactly where the gap lies, 539. And it's important to note, I'm making these gap levels exact, but as I mentioned before in some of my classes, the market's an art, not a science. Price is never going to come directly to your levels in reverse. It's just not that easy. But you can kind of see how that played out here, right? We broke above that gap first bar of the day, came back, retested it, moved a bit higher, came back, retested that gap level again, then broke through the gap, retested it twice here and here, and again, continued to move higher following that. So gap fills in general, you want to just kind of wait for them to begin before trading them. Just like any trading strategy, right? You want to be mindful of the outside factors that influence the market, a big one in this case being volatility, right? When the VIX is trading at 65, things are always going to be more difficult. So you can't expect, an incredibly easy trade when things are that volatile. Cool on that? Can I post the EMA cloud study and the above average volume study I used in the price action video? Yeah, let me get that really quick. Where's that? Tools, shared items. Shared items. Fine. So we have high volume right here. Copy that. I'm going to paste the high volume study in the chat here. There's that one. And then the other one, EMA Cloud. That one there. Cool. So there's those two studies. Those should be good for you in the chat. When applying them, go into setup, open shared item, and paste it here. If you just try and click the link in the web, it won't actually work. But if you go through it this way, it will work. So, yeah. Thoughts on Hood? Yeah, interesting question. Haven't looked at it in a little bit. It was kind of stalling out at the moving averages the last time I checked it. So haven't spent too much time looking at it recently. Let's take a quick look here. Okay, so starting to look constructive, right? I think what I mentioned the last time I looked at it is I'm not interested in entering long right here. And this was the last time I checked it. It was right at the moving averages, declining moving averages. Now starting to look a little bit better, right? It's made it above those moving averages and starting to maintain above that $20 level. Again, still not something I'm super keen on buying. Like I think I mentioned in the last lecture, MMA absolutely sniped it with a buy somewhere around here. In hindsight, that was the place to get in, right? Pretty much bottom ticked it. At this point, right, all throughout here, unless you bottom ticked it, I don't really see much of a reason to be a buyer unless you pretty much bottom ticked it. What I would be looking for in this name is for these EMAs to flip positive with the 10 EMA above the 20 EMA. At that point, I would be a bit more excited to be a buyer. Kevin Grover, thoughts on Apple maybe hitting 130? Yeah, just like I mentioned, right, this is one of the kind of examples of relative strength that I'd be looking for in the market right now. This thing has literally been green every single day since this drop. So obviously it's one of the names with the most strength in the marketplace here. If we look at the levels I used to have on this, it came back, retested that prior all-time high, and then coming back into these fib extensions that I had on it from before. In terms of hitting 230, I think it's pretty realistic based on the current chart. Also starting to hold above this pivot here, which is a good look. Again, though, similar to the rest of the market, it's been green for a long time, right? 10 days straight with a closing price greater than its opening price. So clearly people are interested in this name. any pullback, I think, would be one to buy. So a move back to the EMAs, in my opinion, would be one to buy, or a break. I mean, let's see, just take a look at the hourly really quick. Yeah, I mean, a break over 227 would be probably what I'm looking for to get long. Um, if we didn't get a move back into the EMAs around 222. It looks good though, right? I mean, Kevin, like I mentioned, these are the types of setups that I'm looking for right now. It's definitely a market for individual stock picking at this point. And the most important thing is to be looking for the names that have weathered the storm better than others. And when I say weather the storm, I'm referring to the recent correction that the market experienced. So, for example, right, some examples of names that have weathered the storm a bit better are going to be your Apple, your Nvidia, your Shopify, right? Weather the storm a bit better. PLTR, another example. Some names that have weathered the storm not so great are like your AMD, right? Starting to get some action finally, but still definitely not leading the market. I think MU, again, another example, not really out of the woods yet, definitely not leading the recovery, but starting to set up constructively, right back above the 200 moving average. It could provide an opportunity. But that's really what I'm looking for in the short term is those names that are really leading the market higher and trying my best to stay away from the weak links until I have a reason to. And this is me speaking from the mindset of a short-term trader more than a longer-term investor, right? As a long-term investor, MU still arguably is at a reasonable buy point. Looking back at the weekly, we're down, we came down almost 50% from these swing highs. We're holding back above this previous all-time high. So a reasonable point to be a buyer for the longer term, right, with a longer time horizon. AMD, not quite there for me yet. Probably needs to get back above the 164s if you did get it at the bottom here. But same idea there. Yeah, Tim, open-ended question here. Can you walk through my number one favorite A+ setup for entries? Yeah, interesting question. I can talk through that. I think Meta is close to what I'd be looking for. So let's talk through it, right? Number one is always going to start with the higher time frames, right? And looking at the higher time frame on Meta, right? This one has been on a massive run, right? Volume patterns are incredibly positive for the most part. Every significant above average volume week corresponds to either buying or a hold of support in this specific example, which is all positive, right? Really, except for this one on this earnings report. But for the most part, volume patterns all really positive. This last earnings report, bit of a concern, right? Finally, some volume dropping off there. But overall, right, volume patterns are positive. We're sitting above prior all-time highs here. Trend is positive with a 10 EMA above the 20. 50 EMA and 20 EMA on the weekly are also trending positively. So overall, we have a pretty strong uptrend here on the weekly. Moving on to the daily, we have a bit of a mess over the prior couple months, right, with all these gaps and kind of choppiness in the area. But in the short term, right, we're getting a pattern that I'm very interested in and bringing some of these levels back up here. So we're right at this prior all-time high, this 531 area. And then we also have all-time highs, true all-time highs right around the 543 spot, right about there. And what we're starting to see is this nice consolidation, right? So volumes beginning to taper off, as you can see here. Price is beginning to start to range as the moving averages catch up. And also, kind of another kicker here is we're just holding right around that prior high off of that earnings report, which is also another decent sign here. And zooming in a bit on the lower time frames, we see something similar, right? Again, kind of zooming in a bit here, you have what you could kind of consider if you squint what looks like a cup and handle, but not really something I'm going to give too much weight to. But nice high volume at the lows here, indicating the presence of buyers. And again, as we move higher, right, our most recent highest volume was this hold of the moving averages. So nothing to be too concerned about here. 4 hour is kind of just flagging right into the moving averages. So positive sign here. Hourly as well, doing something pretty similar, really just sitting in a range. The past couple of days in terms of the 5 minute, also, again, really doing nothing. And let me just pull it up here to make it a bit cleaner. Past couple of days, really just doing nothing, which as an options trader is not the worst thing ever, right? When we see a name consolidate like this, really that makes options premiums cheaper as volatility goes down. So I wouldn't say actually that this is A+. I kind of lied about that. I would say this is like B+. only because, and the reason I didn't pull up an A plus is I don't really have an example of that off the top of my head right now. But it has most things that I'd be looking for. Kind of some reasons I don't like this one as much is we're sitting real close to prior all-time highs, and it's always going to be difficult to be considering getting long right at all-time highs. And also, I would have preferred to be a bit earlier in this trend. Like if this sort of consolidation occurred down here, I would have been a bit more excited about this one. But yeah, a couple reasons not to like Meta as much. But those are kind of the things that I'm looking for. And just to kind of draw it out a little bit, really my A plus setup looks something like this, where we have price trending lower like this. Then we start to see some basing like this. Start to set some higher lows like that. Get a break above the moving averages, retest, then move higher. This is my ideal entry most commonly. And typically this would also be when, and I'm just going to draw what I'm going to consider a moving average here. Here, I'm going to draw a really crappy, let's put this, I got a good idea. See if I can draw the moving average. Or I mean, let's actually pull up another graphic. Give me a sec. This is the ideal place for me, this EMA crossback phase, right? It's that first pop above the moving averages once they turn positive. So the 10 EMA comes above the 20. We got a nice basing pattern here below. So it's obvious that buyers have taken place or buyers have become present in whatever name that I'm trading. So this EMA crossback phase is my ideal entry location. And typically when I find those A plus setups, which a decent example of one that I traded recently is probably Shop. So Shop was one that I was in a couple weeks ago, probably a month ago at this point now, which has similar characteristics. So I actually entered Shop here. I was in something longer term, so I was a bit early on this one, but I was looking for that same type of setup to occur here, which is exactly what we got, right? We got that nice EMA crossback where the 10 came above the 20. We retested that and a decent move higher off of that as well. Took some time, but there was a reason I was positioned for the long term on this one. And if you look from when that setup occurred to the max profit, it was about a 10% gain on equity, which is really nice for shares. So I was kind of anticipating that same move on Shop here. Wouldn't have considered this an A plus setup right here. Probably would have considered it A plus right around here though. That makes sense and answer your question? Rodrigo asked if I could check Tesla. Yeah, that'll be next thing. I also want to encourage you. I see questions slowing down already. I want to just let you guys know, keep them coming. We got a lot of time here, so literally anything that you guys want to cover, we will cover. Next up is Tesla. All right, yeah, Tesla is a very interesting one. I think they have their robo-taxi event. I'm assuming the market's going to start anticipating that. I think that's out in about, I think it's probably like 60 days out at this point in time. Tesla actually looks better than it has in a while, though. Let me clean this up a little bit to make this clear. Pretty obvious downtrend line here that we're recently getting above. So I could probably clean this one up a bit on the 4 hour here. Let me just redraw that. Okay, so pretty obvious downtrend line that we're now making it above. Definitely a positive sign there. And again, right, we're starting to trade above those EMAs. What I would look for, at least on Tesla, is a move where these EMAs turn positive. So we get that green cloud with the 10 EMA above the 20 EMA. At that point, I would argue that this is a pretty decent looking setup for higher. Just taking a look at the volume profile to get a bit more context here. Yeah, so big area of resistance right around this 232 spot. Definitely a place to be trimming. If you do get into this trade, decent area of support all around current price though, which is a positive. So we've made it through this. Let me make this volume show up a bit easier to see here. Give me a second. Okay, that's an obnoxious color, but hopefully a bit easier to see. We've made it above this area of resistance right here. So massive shelf here. Obviously, that's always going to act as some amount of support or resistance. In this case, it should act as support. Now that we've made it above this area, we got a pretty significant lack of resistance above current price as well, which is a positive sign. And really the biggest level to watch out for in the short term is this 232 area. So me personally, if I was looking to get into Tesla, I would like to see these EMAs turn positive again, but this chart has made a lot of progress in the last few days and weeks, right? We were below the 200 moving average at one point. We're now back above that. We're back above the 50 and back above our short-term moving averages. So in my opinion, this is looking, and also Tesla has that kind of catalyst to look forward to as well. The robotaxi event that for some reason a lot of people are looking for. Well, I shouldn't say that. Anyway, it's a big kind of future source of revenue potentially for the company. So it's an important event and something to be watching out for as an investor in Tesla. So yeah. Any other questions on Tesla? I guess I could go talk about just a quick trade plan on this one here. Yeah, so this 215 level, a bit below current price, that would probably be a bit too deep of a retracement. Oh, actually, no. Yeah, okay, that makes sense. So this 215 area is actually kind of the most interesting spot to me right now. I don't know if we come back here, but definitely a lot of previous interest in this area, as well as recent interest. And that also lines up really nicely with our EMAs and our 50 SMA. So I think a retracement back to that 215 area could be a really nice spot for a buy. Yeah, I don't hate Tesla right now. It's definitely lacking the market in the short term, but over the past few months, it has been a leader, right? With this significant move higher. I think this was like a 40 to 50% rally in 2 weeks. So it has the potential to be Tesla as always. So I don't hate it actually. Yeah, so Albrook's interesting question. When I look for entry on a swing, do I look at volume intraday? Anything I look for to take entry when price comes to my level? Yes. So the answer is yes. When I swing trade, my trade idea starts on the higher time frames. So the reason that I'm looking at a trade for a swing comes from things like the daily or the weekly time frames. However, when I'm actually entering, I'm typically looking at the lower time frames to actually find that entry. So let's say, for example, I'm looking for a break above a specific level in order to get in a given trade. Let's say, for example, Tesla, right? Let's say I'm looking for a break above 232 in order to get long. Typically, what I would do is set an alert at that 232 level or right below it. So that way, once price actually breaks or gets close to that level, first of all, I'm ready to execute, right? I'm notified on my phone, I get that alert, and I'm ready and prepared to actually take entry on that. And second, I'll look at typically the 5 or 15 minute and ideally just see some nice confirmation as we break through that level on the shorter term time frames. So that could look like a nice bull bar breaking through that level on high volume. That would typically be the best signal. It could look like some other variations of what I just said, but for the most part, I want to see some kind of nice confirmation as price breaks through that level on the short term as well. And the same thing goes if I'm looking for kind of an entry on a swing at a specific level of support. I would want to see buyers begin to step in at that level of support. If not, typically I would try and hold off a little bit and wait to see those buyers step up at that point. Does that make sense? Cool. Gavin says, can I show you how to set up my charts for quick trading? I'm going to ask you a question, Gavin. Can you let me know what you mean by saying quick trading? I don't think I fully understand exactly what you're asking there. I don't really know what that means. If you're talking about just like active trader setup, we can go through that. If you're just talking about like a nice clean look and feel, we can go through that. But yeah, I'll need a little bit more definition behind exactly what you're asking for that one, if you don't mind. I'll wait for that. Clean look and feel. Do I have multiple charts at one time? Yeah. Okay. So great question. I will show you kind of my typical setup. So I have this saved as a workspace right here. So you kind of see how this works. On one screen, I have this sort of setup here, and then I can tab over to a larger chart. And then on the other screen, I have, on the other screen, I have this window. So just as a little bit of background, typically what I'm looking at on my main screen is SPY and the Qs. And I have the 5-minute here on the left and the 30-minute here on the right to just have a bit more kind of a larger time frame understanding of what's going on. I like to have the SPX here so I could just get a quick reference of where the SPX is at relative to those psychological levels and any other key levels that I have. I have time and sales of SPY and QQQ. And then I like to keep just one active trader window open because I'm typically not really in a point where I need to active trade multiple different contracts at a time. So I like to keep just that one active trader window open. Then on the other monitor that I have, I typically am monitoring the two most important stocks to me on a given day. So the default for me is just Apple and Amazon. Obviously, I can change this as needed. And they're linked to each other as well. So if I change a ticker on one, it changes on the other. And same thing here. So both charts sync together. And then again, also I have this tab right here where I could just look at a larger time frame chart if I'm trying to just take some time and just study or plan new trades or whatever else. So in terms of setting this up, the first thing that you can do to configure the look and feel is go into setup and then application settings, and then going into the look and feel here. And you can set your color schemes. So you could make it dark, light, any of these, or you could just do a custom thing. So you can set the colors to whatever you want. I start with the old school TOS colors and then just customize things by making some more stuff black. But you can do it whatever way you want. And this sets your kind of system-wide look and feel. So for example, if I wanted like a flashbang type of setup, I could do it like this, where it looks like this, which I think this is pretty disgusting. Or I could go back to this. It usually breaks. I don't know why that happens. Anyway, you can switch back and forth between those looks and feels. How do you tab between screens? You can essentially just like create new screens like this. So I'll walk you through that really quick, Gavin. So in terms of like creating this for the first time, that's the most important thing, is setting those application-wide settings. And if you don't do that, let's go back to this. If you don't do that application-wide settings, the next kind of most important thing is setting your style settings. And when setting your style settings, you can do that by clicking style here on one of the charts and then going into appearance. And this is where you set the style of each one of these charts. So you could set candlestick colors to whatever you like and the background of the chart. And then I typically save that as a style. So that way I can always kind of cycle quickly between the way I like things to look. So I have a style set for if the background is blue. I have a style set for different ways to display charts. So a lot of different kind of random styles that I have in here. I don't know what this empanada one is. I don't remember why I call that empanada, but that's empanada. Anyway, so you can save styles just to have kind of preset ways for your charts to look. And then finally, in terms of actually setting all this up, it's pretty simple. So I like to set everything up in a flexible grid. In order to edit the flexible grid, you click this 9 boxes up here, click customize grid. And then what you can do is these panels come up where you can add or remove different windows. And then in these different windows, you could change the components that you're looking at. So like, for example, this is just all defaulting to charts, but you could make it be time and sales or a bunch of other different things. So that's kind of the high level on setting up TOS. Yeah, this is, again, high level. Obviously, I can't go into full detail right now because I'm sure we could spend an hour on that alone. But just for your awareness, Gavin, TOS also will do like a free walkthrough call with you. They'll do like a 1 hour dedicated training with you. So if you want to learn more about kind of what they have going on, you could just book that with them. You could probably just ask support and say, "Hey, I'm ready to book this." And they'll set up a 1 hour training with you for free, and I believe you could guide it in whatever direction you want. So if you just want help setting up charts, they will give you an hour to tell you the best way to kind of go about this. But again, right, that's only if you want to do that. All right. Al Brooks, for stopping out, I have said that I wait for losses of levels on the larger time frames. Let's say a level is lost, but the daily candle still hasn't closed, and we keep trending down. How do you deal with this? Do I run a hard stop? Yeah, so that's a very interesting question. 9 times out of 10, I do not run a hard stop or a loss. And what I mean by that is the times I will run a hard stop is when I'm in profits, and I'll set a hard stop above break even, so I'm guaranteed to make money. Um, in general, though, you have it exactly correct. I won't stop out until a candle closes below my stop loss, and typically that candle is going to be on the higher time frames. Now that said, right, if there's sometimes reasons for me to break that rule. Like for example, if it's very evident that there's a significant amount of sellers stepping in as that level breaks intraday, I won't hesitate to just stop out on that break. If it's maybe if my stop is supposed to be a daily stop, and on the 30-minute, it's pretty clear that there's a lot of sellers stepping in. Um, I'll go ahead and stop out. But for the most part, that's all just based on what's it called? I don't want to say intuition, but basically it's based on price action, right? It's reacting to what's going on in price in real time. Yeah, Zoom user, we can talk about NVIDIA chart. Cool. All right. Again, let's take a look at NVIDIA. Most of these sorts of names showing relative strength, I'm going to have a similar opinion on. NVIDIA is one that I think definitely, after a pullback is going to continue to be a winner. But for now, it's not at a place where I'm incredibly interested in entering. I would rather see a retracement back into the moving averages, which for NVIDIA brings it right around 120 in order to actually get long. Now, that said, that's more from kind of a swing trading mindset. If day trading, I wouldn't hate actually getting long above this 130 area if we got a decent inside day right off of that spot. So I wouldn't hate getting long above 130 into 132 and 135 ish. That just for a day trade though. In terms of kind of a longer / medium term position, I'm not very interested until we come back down to this one a little bit below 120. And again, that's the same way I'm feeling on a lot of names, right? It's still a point for me. I'm still at a point where I'm identifying the names showing relative strength, but not jumping out of my seat to get long on them or to rush into them. So again, NVIDIA definitely, obviously one of the strongest names in the marketplace, still showing the most relative strength out of all other semi names. So it's got to be the priority. But right now, I think you're a little bit late if looking long. Like realistically, in hindsight, right, the optimal long entry was here at the lows. Outside of that, there hasn't been a very good, high quality long entry on a lot of these names. Like this really was the entry, and the term typically used for this is called a lockout rally, when price just moves straight higher with no major pullbacks or reasonable entries. This sort of rally rewards people who are okay taking on a bit more risk and not waiting for a higher quality entry. And obviously, that's worked. That sort of strategy has worked very well so far. But me personally, I'm more interested in being a bit more patient and waiting for price to come back, revisit the moving averages, at least on NVIDIA and all those other names showing relative strength, before I get too excited to the long side. Apple, Victor, we covered. And again, it's pretty much the exact same story as NVIDIA, right? Again, just to reiterate, it's a name showing relative strength, right? It looks pretty good in the short term. If I'm day trading it, I'd probably day trade it above this 227 area. If I'm looking for a swing, though, I would much rather be more patient and wait for these moving averages to come back into play, this 222-ish area, 222 to 220 area, before getting long. Yeah, so iPhone, where do I have my option chain on my setup, or where do I set it up to send it to Active Trader? So to be honest, I haven't really used the Active Trader or my TOS account at all for active trading. Yeah, I haven't been day trading actively as much at all, or even really swing trading recently. But in the past, I used Active Trader and TOS as a brokerage a lot more, and now it's mostly a charting platform for me. I really haven't active traded out of my individual TOS account in a while. I mostly just keep my Roth on here. That said, when I do, or if I was to active trade out of TOS, I don't think this is the best way to do it. But what I used to do is I would just type out the contract I was looking for manually. I kind of just memorized the format that was supposed to be in here, to pull up an option contract. So the way to pull up an option contract is type in the ticker. So I'll just pull up TSLA. Then you put in the year. So I'll just put 24 for 2024. Then you put in the month. I'll put in September 09. Then you put in the day, and you can see it starts to give you kind of options here. So we'll just click on the 20th, and then it starts to let you autofill. So you can do call, and then select a strike. So for Tesla, we'll just do C 230, right? The 230 strike call for September. And here you can see now we have the option chain for Tesla. I think there's a way that you could go into the option chain and like send it by default. If you just do like send to, maybe, yeah. So what you could do to make it a bit easier is you could give this a label. So I'll just label this like number 1 or number 8. And then what you could do is go on the options chain, right click on a contract, and then just click send to 8. And if I go back to the chain, that call is there. So that's the quickest way to do it. I don't know why. Yeah, in hindsight, yeah, probably should have always been doing that. I just kind of prefer to type it up for some reason, but this is going to be the quickest way. So again, just to reiterate, you have your active trader window here. You give it some kind of number, so 1 through 8, or some kind of link. And then in your options chain, you can right click any contract and just send it to that number, and it's automatically there. So it's pretty cool. All right, I'm out of questions. What else we have? Questions, comments? Want to make sure we get everybody's concerns all addressed. Lambo, we're hitting all-time high. All right. Oh, are we? Honestly, Lambo, I'm not super confident in the short term. I'm mostly interested to see what comes out of Jackson Hole on Friday, and also cautiously kind of just waiting. I'm not really in like bear camp right now, but I'm not super bullish either. I mean, we've moved up pretty significantly, and for me personally, I would rather wait for a pullback. Can price continue to move higher from right here? Yeah, I mean, 100%. And obviously, after this discussion, I'm assuming based on what I say, the market's just going to move higher just because it's going to inverse me. But anyway, can I explain the theory how the market will react to cuts? Super complicated, Lambos, but a very interesting question. There's kind of 2 different camps right now. And let me just pull up let's just pull up the FOMC minutes. Let's go back to the FOMC's most recent dot plot. I think that's going to be here in June. I think that's the most recent. Okay. So this that I have pulled up is the Federal Reserve Summary of Economic Projections. They release this every other meeting, and it pretty much shows what they plan on doing, or what they plan on the economy doing for the next couple years. And then if we pull up FOMC, or Fed funds rate. Okay, so the Federal Reserve current funds rate as of the 19th is, well, their target range is 5.2 to 5.5. If you look at the summary of economic projections, most of the Federal Reserve raised their projection, or all of the Fed members raised their projections for the end rate at the end of 2024. So earlier in the year, they thought the Fed was going to be maintaining a rate of around 4.6%. And at this June meeting, they revised those projections up to 5.1%. Which essentially means that they were planning on cutting rates less than they planned in the year 2024. And that really corresponds to one rate cut, or really half a rate cut, throughout the entire year of 2024. Now, at the time, that wasn't a concern. Back in June, that wasn't necessarily a big concern. However, since that time, we have had some deterioration in some economic data points, most notably the unemployment rate. If we take a look at unemployment rate in US, you could start to see that tick up a little bit. And we've started to get a little bit more unfriendly numbers in the unemployment rate. And typically, I think that 4.0 number is really where people start to get a bit more concerned about it. And you could see we've been steadily rising. That unemployment rate has been steadily rising month over month for the past multiple months. Additionally, we've also seen non-farm payroll employment start to also decline. So less people are getting jobs, and also more people are going on unemployment. So that really typically leads to one specific thing, which is the economy in the United States could be heading towards a recession. And as a result of that, if the Federal Reserve continues to keep rates high, which means money is expensive, money is hard to get, making their policy deemed as more restrictive, that is typically a negative sign for financial markets. We've seen multiple examples throughout history where the Federal Reserve has kept their policy restrictive and ultimately driven the United States into a recession. So the market has multiple examples to go off of where that has happened before, and they are worried that the Fed earlier in this cycle was too late to begin raising rates, right? As we all know, inflation got reasonably out of control, moving close to that 9%, 9.5% mark back in 2022. So the Federal Reserve was late to raise rates originally, and the concern is now that the Federal Reserve will again be late to lower rates, which would ultimately cause us to go into a recession, which if the market or if the economy goes into a recession, most people can think about why that's negative, right? If the United States is in a recession, that means people are going to be spending less money. If people spend less money, that means businesses get less revenue. If businesses get less revenue, that means they have less profit. If they have less profit, that means the investors are getting a smaller return. And those companies are no longer hitting the growth metrics projected and priced in by investors. So it's a really roundabout long story, but that's the best way for me to put it succinctly. Do you have any questions or comments about that? I realized the one thing that I didn't define is what the Federal Reserve fund rate actually is. The short answer is this: Fed funds rate is essentially the price of money in the United States. So the Federal Reserve is the central lender. So for example, if we want to get money, we go to a bank, right? We might go to a small bank, we might go to our friend, we might go to a bigger bank like Bank of America or Wells Fargo. Banks also need to get loans. Small banks will go to bigger banks to get loans. And the biggest banks in the world can't go to other smaller banks to get loans because that's not how that works. So the biggest banks like your JP Morgans, your Goldman Sachs, your Chase Bank, which I guess is JP Morgan, are all going to go to the Federal Reserve for loans. And those are going to be pretty massive loans. And when you go to the Federal Reserve for a loan, right now you are going to pay approximately 5.33% interest. And the whole point of loans is for banks to make a little bit of money on that interest. So if JP Morgan is getting their money for 5.33%, they're going to loan that money out to smaller banks for, say, 6%, right, or 7%. And those smaller banks are going to loan that money out to you in the form of mortgages or car loans for something like 8% or 9%. So everybody's adding a little bit of margin in order to make that money back that they need to invest in servicing the loan, the risk that they have to take on, the hit to their balance sheet, right? All of those sorts of things. So that was a long-winded story, but hopefully that kind of makes sense. Mike asked me if I think we're headed for a recession. I'm personally no economist. I'm in no way, shape, or form an expert on these sorts of things. Do I think we're headed for a recession? I really have no opinion. The answer is I hope not. I think the people who wish for those sorts of things are irresponsible, considering that when the economy goes into a recession, right, that's hundreds of thousands of people losing jobs. That's people's businesses going under. So I'm never going to be in the camp of hoping that happens in order to get an outcome in financial markets, right? I'm never going to be hoping I make money in the market, and that hope is driven by people losing their jobs, right? I'm not in the business of looking for that. However, I would probably just wait to continue to react to data, just like the Fed is. Right? Again, I'm not in the business of predicting a recession. I'm not in the business of making those sorts of guesses. I'm just not, right? I would rather let the experts do that, which is supposed to be the Fed. And for now, they're confident that we're not headed for a recession. The data is starting to show otherwise, potentially, but I think that's cooled down a little bit. And so far, I think we're in a decent spot. But again, if we go into a recession tomorrow, yeah, don't blame me. Good, Denise. I'm happy to hear that. How can you filter or find where above average volume pre-market is using TOS? Which filters should you use for big caps when it comes to min-max volume? Yeah, so that's a bit of a two-parter. I'm going to answer the second part first because I want to. In terms of finding mega cap stocks, wrong bookmark. In terms of finding mega cap stocks to trade based on volume, oh my God, wrong bookmark again. Close all this out. So what I like to do is use Finviz. It's free scanner. And what I like to do is scan for, let me just get in here. If I'm scanning for mega cap stocks, I look for, if I'm scanning for stocks to trade, I look for names that are above $5. So no penny stocks for me, because technically under 5 is penny stocks, even though that's not really penny. And then I'm looking for at least a mid cap name. But if I was looking for mega cap names, honestly, I would be kind of less concerned about volume. If a name's a mega cap, right, you should be reasonably confident that the volume is going to be there, at least on the equity, for you to trade it. There's definitely some mega caps that the options are a little bit less desirable. But in general, if you're trading a name that's a mega cap, you should have absolutely zero concern about liquidity on the equity. It really, even like upwards of mid caps, right? You should have no concern about equity liquidity. In terms of options volume, though, I don't have a specific way that I scan for that, to be honest with you. So I can't really say for sure. I personally just have a list of names that I like to trade and know have liquid options. If I see a name that I want to trade, like for example, maybe ASML is a name that I want to trade, instead of like scanning the volume, I'll just go look at the chain and just take a look at what the chain looks like. So ASML, I'll take a look at the chain, right? This is the monthly expiration. You can see the spreads on this name are reasonably tight, but volume's pretty bad. So I probably wouldn't trade options on this ASML. Yeah, volume's pretty low. Spreads in contracts are still looking at the wrong thing. If I'm looking at this week expiration, volume is pretty low. Spreads are not the best. So it's probably a name I would stay away from. That's typically how I would do that. Now, filtering average volume in pre-market, you can do that with TOS scanner, which I think you can do here in Stock Hacker. And I don't know off the top of my head how to set this up, but what you could do is probably set up some kind of like, let's see. You would set up like, for example, market cap minimum is going to be, I don't know, 2 billion or 200 billion, which is a mega. So there's your mega caps only now. And then here, if we wanted to search for, let's see, net change. So we would want to see names that are green on the day, right? For example, like if we're filtering for average positive volume, we want to look for names. Well, net change actually might not work in pre-market. That might not work. Okay. If you wanted to filter by volume in general, right? You didn't want to trade anything that has less than 100,000 volume in pre-market. You could do that in this way. So now we're filtered down to about 4,000 stocks. And we could go ahead and just scan this. Eventually it'll load, maybe it won't. No matching symbols. Really? How is this not working? Did I do something wrong? Maybe that's not what I meant to do. Maybe I should have filtered by market cap. Maybe I added an extra zero. 200, 0, 0, 0, 0, 0, 0. That's 2 million. This is 2 billion, I think, right here. Huh. That's weird. Am I reading that correctly? Yeah. Anyway, I'm personally not an expert in setting up scanners on TOS, but this would be the way to do it. Yeah, honestly, I personally would have to watch a YouTube video to figure out like the best way to do this. I honestly don't know off the top of my head. Um, I don't really set up scanners like this, to be honest. But if you have any questions when you're setting up a scanner, I'm happy to like answer anything. But yeah, to be honest, I'm not really an expert. Any other questions? This Q&A has been really good. This is a lot of like diverse questions. Awesome, Denise. Thanks for being here. Thanks, Elite. Good seeing you. Thanks for being here, Mikey. Appreciate that. Thanks, Husky. Thanks, Tim. Good to see you guys. All right, everybody. I appreciate you guys' time tonight. I have lecture again tomorrow. I don't remember what the topic is, to be honest with you, but I'll send out an announcement in advance. So I'll see you guys all tomorrow, same time, same place. 2 lectures this week, so it should be a fun week. And yeah, have a great evening, and I will see you guys all tomorrow. Adios.